What's going on, guys? Good morning. I hope you're having a great week so far. We're going to break down in this video the overall outlook for 2025, really what I believe is going to happen in 2025. You guys have been with me for the last 6 months, year, 2 years. Obviously, I want to steer you in the right direction. I want to tell you exactly what I'm doing with my crypto, with my stocks, with my overall portfolio very soon heading into 2025. And I want to tell you some new ideas that I think might help you and your family. So I'm going to be sharing my whiteboard with you, doing some drawings for you. We're going to look at the charts. We're going to look at some different graphs to understand how we can grow our money even in a bear market. Okay, so let's get right into it. Of course, this is all my own opinion. I am licensed to help people with life insurance and annuities. I've been doing that for the last 8 years. We'll talk a little bit about that today, but everything else, just my own opinion. You should also do more research, even from the things that you hear from me in today's video. So looking at this, we're going to keep this short and sweet. The QQQ, you could also pull up the VOO, is creating massive negative divergence. Okay. So what does that mean? That means basically when the asset is making higher highs, like you see here, and the RSI is making lower highs, it's very bearish. Okay. Last time this happened was in October 2021 for 3 months, and then it crashed in January 2022 all the way for a year. Basically, all of 2022 was red. Okay, all your stocks were red, basically. So I do believe this is going to happen again, and I think it's going to be a lot worse than this crash right here. Okay. I also am basing this off of the Fed hiking rates and now dropping rates. And if you just do some research and you go back in time, every time this has happened, it's led to a bear market, recession. Stocks are going to fall. Crypto is going to fall also. I'm also believing this is going to line up with the halving cycles. We know for Bitcoin, usually we're in a bull market 12 to 18 months after the halving event. Well, April 2024 was the last halving period, and we're almost there with the 12-month period, right? So that's just what history has shown us. I think it's going to be less. I don't think with the bull market's going to be 18 months from April 2024. I think it's going to be a lot less, and I've broken that down for you. So now that we're understanding exactly my mindset on what I think is going to happen into 2025, because of this, what you see right here, I could even show you guys the VOO real quick, and it is the exact same negative divergence. Okay. So I think we'll have one last leg up, but I think the end is near very soon. I can even pull up a monthly chart for you. This is a 3-month chart, and you'll see the monthly chart is also creating negative divergence. Okay. So you got to do what you got to do at the end of the day. But this is really my mindset going into, we're in 2025, but over the next 6 to 12 months, you got to be very cautious. All right. So now that we're clear on that, what is the game plan? Well, if you see this chart right here, guys, there's 3 different ways that we can grow our money in a bull market and a bear market. We have fixed growth. This is like a high yield savings account, I would say. Right now, you could probably earn anywhere from 3.5% to 4% on these, but they're dropping, right? If you look back 6, 8 months ago, we were getting offered 5.5% on high yield savings accounts. Now they're at 4. Okay, so fixed growth is definitely an option. You can put your money in the bank. I assume they're going to drop more. Okay, so just be aware of that. You're not going to get insane growth, but if you want to put it in the bank, it's going to be safe. It's not going to really grow much, but that's that. Okay, it provides you guarantees, but it's not going to outpace inflation. I don't think it will. Then there's variable growth, which a lot of us are in right now, stocks and crypto, maybe your 401k, your IRAs, your Roth IRAs. Basically, that goes up and down with the market. And you probably have experienced some red days, some red weeks, and you've also experienced green weeks, and you've been really happy. And some days you're like, what the heck is going on? Well, you're in a variable growth product, so it's going to go up and down. Now, with what I just showed you with the VOO and the QQQ, what do you feel is going to happen very soon? Right? A lot of people that have money in these 401ks, these IRAs, they're probably going to lose a little bit of money temporarily, depending on their timeline and when they plan to retire. So again, this is a great product. I love it. With stocks and crypto, we talk about it every single day. We participate in the gains and the losses, right? And we take a more structured approach. We kind of know exactly when to time certain things, which we've broken down. But here's the third option. It's called index growth. Okay. The way it works is you participate in the gains and none of the losses. So when the stock market goes up, when the crypto market goes up, you're making money. But when the stock market goes down, it locks in your gains. So imagine that. Imagine, let's just say you were interested in an index product and I'm wrong. And let's say you move money into an index product and the market does great over the next 12 months. Well, guess what? You're going to earn interest on that account. But what if I'm right? And what if the market actually goes down over the next 12 months? Well, thank God you moved some money into an index product because you just protected your wealth. Okay, so you have to understand your timeline and your risk tolerance. For me, I will share with you guys, I have all three. The fixed growth, not really a big fan of it. I do have some money in a high yield savings account, but a lot of my money is obviously in variable right now. That will soon move out of that and more will go into my index growth. But we do put a lot of money in index growth products for retirement and for the long game because I don't want to lose money. You don't want to lose money. This is stuff we were never taught in school. Okay. So there's really two different types of products when it comes to index growth. There's something called an IUL, Index Universal Life Insurance Policy, which I've talked about before that I use for my entire family. Even my two young kids have Index Universal Life policies on their own life. And the reason for this is, and I'll share my whiteboard with you in a second, is we can put money into these policies every single month or every single year, and it's never going to lose value. It's right here, index growth. So when the market does great, we make money. When the market goes negative, we lose nothing, okay, while also being protected with life insurance. The other cool thing about it is you could take loans from yourself and you can go buy undervalued assets. So I did this in January of 2024, where I took a loan for my life insurance policy, which is 100% tax-free. I invested it in crypto in January 2024. You can go look at crypto like Jasmy and Dogecoin. What were those priced at in January 2024? They were a lot lower than where they are today. So I've already tripled that investment in a matter of a year. And the money in my life insurance policy is still earning me interest. So I actually made money in my life insurance over the last 12 months, and I made money in crypto from that loan. So I'm really making money in two places at once, right? So there's different ways that you can use these products for your future. Now imagine this. Imagine you have a bunch of money in your life insurance policy, and I'm right, and the market crashes. Well, thank God you have all this money safe in your life insurance. You take a loan from yourself, which is 100% tax-free. You go invest it in an undervalued stock or crypto or real estate, whatever you feel like is going to go up in value, like I did with crypto in January 2024. And now you have two assets. You have the money still in your life insurance, and you have money in that new asset that's growing for you, right? This is what wealthy people do with their money. This is how they utilize life insurance. But the problem is we were never taught this in school. We were all taught to go to school, get a degree, get a job, get a company 401k, and that was it, right? And pray that you can make it to retirement. But we weren't taught about how to utilize life insurance, take loans from ourselves, and go buy undervalued assets and increase our net worth. This is what I specialize in. This is what I've been doing for the last 8 years, right? And I have clients in multiple states. And I'm willing to jump on a Zoom with you and show you exactly what my plan is for the rest of 2025 and for the rest of your life, to be honest with you. Like, this is a life plan. I'm going to constantly be doing this because we already know bear market's going to come. That's the time to buy. Would you rather have your money in a bank earning you nothing, or in a properly structured life insurance policy that's growing for you every single year, and also you get it 1,000% tax-free? All the growth is tax-free. The income is tax-free. And guess what? There's no 59.5 rule like IRAs, 401ks, and Roth IRAs. So there's a lot of benefits to life insurance. It's just we weren't taught this. So that's my goal, is to help you guys, if you're interested, learning how to get index plans. Now, the other option is annuities. Okay. So fixed index annuities. How does that work? Well, you take a lump sum of money. Let's just use 100,000 to keep the math simple. You move it into a fixed index annuity, like a company like Athene or Global Atlantic, if you've heard of these companies before. What they guarantee you is no loss. Okay, so it's going to protect that $100,000 regardless what the stock market does. But over the next 2, 3, 4, 5, 10, 15, 20 years, the market will probably recover. And every 12 months, you're going to get a credit. Whatever the market does every 12-month period is going to be interest added to your account. So imagine the market does 20% one year. Well, you start with 100,000, you just made $20,000 that year alone. Okay. There's also things you can add like multipliers. They're also offering bonuses right now for anyone interested in rolling money in with their company. The negative thing, I guess, if there was a negative thing, is there's surrender periods. Okay. So what that means is, Some surrender periods are 3 years and they go all the way up to 10 years. Depending on when you need to access that money, we would choose the right company, the right annuity for you so that you can actually have that money protected and then you have 100% access in the timeline that you need it, right? But outside of that, there's also no fees. So all your financial advisors out there charging you 1 to 2%, maybe even 3% sometimes for managing your account, they're just putting you in ETFs and mutual funds. They're making a killing. These annuities are fee friendly, 0 fees whatsoever. The only thing is your money is with them for like 3 to 5 years. Okay, so as long as that's good with you, it's a great product to lock in your gains, protect your money, and continue to grow it as the years move on. So again, guys, as we wrap up, this is just something you want to be cautious of, is the negative divergence that's forming. Again, on a monthly time frame, we could see something like this happen where we're dipping right now, and then we have one last leg up. Right now we're dipping, we test the EMAs, we have one last leg up, and then I do think we're going to enter a recession. So with this, guys, I appreciate you. Thanks for being here. Hopefully this was helpful. Send me a message if you're interested. You can comment on this, whatever's easiest, and we'll connect and we'll meet.